Today we're going to be testing out one of the most fun strategies I've actually found on internet, and this time it's not a YouTube video that we're actually going to watch, it's actually in a forum. As you know, there's loads of trading forums out there where we can actually learn new trading strategies, new ideas and share our own. In this case we are an Elite Trader, that is basically a trading forum where you can find anything based on trading. It's the same as Forex Factory and all this. And this time I came up with this one. It says, can a simple momentum trading strategy really deliver a 20% annual returns? And I think this is a really grounded question because a lot of people seek for the holy grail, like I want 100% return in a year and things like that. And this, at the end of the day, is quite difficult, not impossible obviously, but it is quite difficult if we actually take it serious with a proper risk management. So at the end of the day, I think it was a great question and I actually wanted to test it out. And funnily enough, he actually gave the strategy here. As it says, the strategy, it's a really simple idea. We only need exponential moving average of 34 periods, a directional movement index, so the ADX, and an arrow indicator. This is basically everything we're going to use for this trading strategy. And I thought it's quite good because at the end of the day, I really like simple trading strategies. My personal one is even simpler than this. And at the end of the day, I think that when it gets simple, we can always have some room to improve it in terms of discretionary. And at the end of the day, that's what the strategies that I most enjoy because I don't have too many errors when I actually trade it. So basically the long and the short entry are exactly the same when the price closes above this exponential moving average of 2034, and either the DMI or the arrow produces a bullish crossover. Entry should occur reasonably to close the emma to risk for the risk to be small. So basically what I've been doing is basically taking the position when the DMI or the arrow produces a bullish crossover, and on top of that, obviously it needs to be close to the emma to actually have this quite close stop loss. Obviously when we say close, we mean that it's not going to be ways away of this moving average, so it's more or less reasonably close. The short entry is exactly the same, but obviously the price needs to be below the 34 EMA, and obviously the DMI needs to be a bearish crossover. The risk management is really simple as well. Stop loss at the EMA basically, and target a 3R of the actual take profit. So if I'm risking $100, I'm going to go for $300. So really simple. We don't need to average, we don't need any discretional exits. Obviously this can improve and as well can pour more the trading strategy. So we'll see how it gets. But at the end of the day, the general question is, can it give us a 20% return risking a 1% per trade? And to test this strategy out, I'm going to test it in Forex Tester Online, obviously. So don't forget this massive discount coupon that you got down in the description, so you can get Forex Tester Online for a cheaper price. And as well, I'm going to be testing it on Apple because I don't normally trade Apple. So I don't know how the market moves. I don't know how it reacts in the opening session and all this. So at the end of the day, I'm not going to have any discretional ideas coming up in my head while I'm backtesting it. And I think this is obviously a good idea to actually proof test trading strategy because it's in a random asset. And as well, I'm going to be trading it on the last month of 2026. So basically we're starting in January. So basically our target is to reach a 20% gain with this trading strategy. We can reach to it in 1 month, we could reach to it in 2, or we might not reach to it. But let's see how it works. And basically I have my indicators set out here, basically the ADX based on a period of 14, and as well my arrow based on 14. So now I only need to place my moving average that I've got it up here, as well as a 34 moving average. It's exponential, so we have everything to go. And basically we are going to be sitting on the 1 hour time frame. So let's test it out. So let's see for the first entry, see if we get it right now. Obviously the price is below this moving average. So now we'll be looking at this here. And actually if we look closely, we'll be able to see that the ADX has actually produced a crossover. So based on this, we can see that the arrow had already produced it. So now basically we are going to look for this sell position. Right now it's quite close to the moving average, so it's not too far away. So we can actually enter our trade here, basically placing our stop loss above this moving average. And as well, basically we are going to place our take profit on a 3-to-1 risk reward. So we're looking for $300 in this case here, so risking a 1% on this $10,000 account. Let's place the order. Let's see how this first trade performs. Okay, it's already made a great move, picking up virtually our 1 to 2 risk reward. Let's see if it continues down. And hey, first take profit risk reward of 3 to 1. So this is a good start, because at the end of the day, we can't expect a really high win rate with a risk reward of 3 to 1, because the math are simple. If we've got a high risk reward in terms of a 1 to 3, 1 to 4, 1 to 5, we can expect a low win rate and vice versa. But in any case, let's see if we get any more entries. Right at the moment, obviously we need to wait for the ADX to get exhausted again, for the price to get exhausted of this move and to push back up and then continue down. At the end of the day, it's really simple in terms of we wait for the price to come down, push up, enter in the pullback and continue down. That's the general idea that I've got right now of the strategy. Obviously, if it crosses and as well crosses the ADX, we have an entry too, but we'll see that in future trades. Okay, it's starting to get exhausted and it looks like we get our crossover right at this point here. But now I get a doubt. Right now, it doesn't specify it needs to be a red candle. So do we trade it or don't we trade it? Right at the minute, we do have a big wick off the moving average. So this is a good feeling in terms of the price and tried to get higher, but the selling pressure was higher than the sellers. But honestly, I don't think it doesn't make much sense in my head. Comment me back down in the comments if you think different, to actually sell on a green candle. Okay, that's just my idea, and I think everybody should would be have the same idea as me. So I'm not going to sell on this candle here. I'm going to leave it as it is, and let's see if it would have hit the stop loss. It would have just been near to hit it, and okay, it looks like, yeah, it would have wicked out. It would have wicked out. So in any case, it wouldn't be a good trade idea. And the same has happened just now. We have the crossover of the ADX again, and on top of that, we have a green candle. So obviously I'm not going to enter in this one. It would have wicked us out again. And now let's see if we get any more entries. Let's expand this just a little bit to let's see it a bit more closer. And right at the moment, we don't have any crossovers, so we're just going to wait. And is this a crossover or isn't it? Okay, we can see that it's barely touching, and there is a crossover. Really small, really hard to detect, but it is a crossover. So we are going to enter in this position because now we have a red candle, and it makes sense because it's near our moving average. So let's enter another trade here, place our stop loss just above this candle and this moving average, and the take profit is going to come down here, setting this to a 1 to 3 risk reward. So we're looking for $300, and let's see how this trade takes out. Okay, we've hit the stop loss, no problem at all. At the end of the day, we have a positive risk reward. So we're not going to be worried about some stop losses happening. We probably are going to have more stop losses than take profits. But let's see if we get any other trade. Okay, we have another crossover happening right here, same as before. And in this case, honestly, I would place a stop loss above the actual wick of the candle more than the moving average. But in any case, let's, as the wick is a bit far away, we are going to place it just above this moving average, so more or less around there. And basically the take profit, no, hang on a second, this isn't a valid trade because I got confused with the crossover. In this case, now it is a valid trade. Okay, now it's happened. Now we'll be entering, and now we'll be placing it above the wick probably, because at the end of the day it's not too far away, and a few dollars of difference I don't think will make too much of a difference at the end result. So let's bring this down to here to a 1 to 3 risk reward, and let's place this order. It seems quite promising. So let's see how it outperforms. Okay, it's just come near to the stop loss. So look like it could have wicked out with a little bit spread. And let's see if it ends hitting the take profit. Okay. Perfect. We're hitting our take profit, sitting on the 5% already. Okay, and we're only been through the first 20 days of, not 20 trading days, but 20 natural days. So hey, that is looking quite promising. Let's see if we get any more entries. Okay, we're sitting on another entry here. There's a really slight crossover happening here. We are close to moving average. So here's another opportunity to enter the market. So let's place our stop loss here just above and bring our take profit down to here for this risk reward of 1 to 3. And let's see how this one outperforms. Probably hit a stop loss maybe. At the end of the day, I don't expect a high win rate. Anything above a 30% win rate would be quite good. So anything on top of that is a bonus. In any case, this one was a stop loss, and that is completely fine. And as well, while we hit this stop loss, we can see we have another entry because basically we are now above this moving average. And on top of that, the IDX is basically showing a bullish momentum, and the Aaron as well is showing this bullish momentum. So hey, let's take this long trade. Let's see where it takes us. At the end of the day, Apple tends to be quite bullish. it's been bullish since it came out, so we can expect some great movements on the top side. And as well, this stop loss, I would place it here just below this wick. So at the end of the day, protecting our stop loss just a few dollars above, I don't think it's a bad idea. Comment down below if you think it's a bad idea. Obviously, any feedback is welcome, but what we're going to do is set this take profit here above and see how this one performs. We've got a nice bullish candle here. Let's see if it continues this trend up. We've got a nice gap there, so it's looking quite promising. Let's see if we finally hit. Oh, it's coming back down. That's not good at all. Let's see if we actually. Okay, perfect. If we would have actually protected the position or anything, or a break even or something like that, it would have hit the break even. Look how the price literally just came down to here. Okay, it would have wicked us out and then hit take profit. So hey, good spot on there by not adding any risk management in terms of once the trade is open. So that is always a great idea. Okay, we're sitting on another bullish trade. Right at the moment, the price came down to a moving average and crossed up again, closing above. And the ADX is showing some bullish momentum there. So we definitely need to enter a trade here. So we're going to place a stop loss just below the moving average and just below the candle. And as well, our take profit is going to be right above at a 1 to 3 risk reward, as we mentioned. So we more or less be looking at something like that. Perfect. And now let's place the order and let's see how this trade performs. Okay, it might come down. It's looking like it's coming down. Oh, that's been really close to the stop loss, so it could hit the stop. Oh, that's good. That's good. Oh, there we go. No, nice take profit there. Sitting on a 10% already on a gain on this account. So we've already achieved halfway through to this 20% in less than 2 months. So this is really promising, because at the end of the day, if we can achieve this 20% in 2-3 months, then we have done our year of trading. So hey, that is some great news. Let's see if we get another trade quite close to here. Okay, it looks like it's starting to turn a bit down. Obviously, it's quite been natural for it to retrace to this zones down here. Let's see how it works out. Okay, so we have another trade happening right here. In this case, on the downside, the candle was closed below this moving average, and we have the ADX crossover on a bearish side. So now, right now, we are going to be looking for this sell position, adding the stop loss above the candle. I would add it above the candle in this case, because at the end of the day, it could retrace up to here easily and wick us out. So it makes sense to put it above the candle. It's not going to make a major difference in terms of our risk management. And we're going to bring our take profit right down to here to 300 and above. And let's see how this one. Okay, this is looking quite good. At the end of the day, when we get so strong bearish candles, it's really good news, and it looks like it's going to hit this take profit. There we go. Take profit's hit, sitting on a 13% already of gain. So it's looking quite promising for this trading strategy. At the end of the day, as I mentioned at the start of the video, I love simple trading strategies, because at the end of the day, we don't get too many errors. Here's a trade that I wouldn't take, because it very closed above this moving average, and it could be just basically a pullback of this massive move we've seen on the downside. So I'm not going to take this one here, because obviously it's just too close. But in any case, let's see. Okay, what we do have now is a bearish trade on this side here. Just as I mentioned, it could have been just a pullback to actually come down to this level here. So let's try out this trade here, because this one is a complete valid trade. Placing the stop loss, I would say more or less around there, and the take profit would be more or less down here, sitting at 300. Now we're looking more at 330, because obviously the stop loss is now 113. So let's see how this one performs out. Okay, it wicked us out, shame, and it did come down. Well, it wouldn't have actually hit the take profit, so hey, we're still sitting on a good side here. What we do have actually, and I did actually go buy it, is another entry exactly the same as we saw before. Now, if we've already got wicked out on this entry here, it doesn't make too much sense of entering again, because at the end of the day, we didn't have enough power to come down here. So it doesn't mean that we're going to have the power now to come down here. It could be just a small range that's forming before it drops. But in any case, we do need to take a trade, because it is a valid trade. But honestly, I don't know if it would be the best idea. As we've seen, it already comes up again. But in any case, we need to take a trade, because what we're interested in is to see how it performs in backtest. So we got some data, as we saw, it hits the stop loss. And comment down below if you would have actually taken this trade after this first loss. I'll be interested to know your opinion. And the shame is it did come down, and I don't know if it would actually hit the take profit of this trade, because literally it wicked it out, and this was $2.3, and this was, no, it wouldn't have actually hit the take profit. Would have been quite close. Our take profit would be more or less nearer down here. This is where discretional exits could come in handy, but in any case, we're not doing this in this backtest. what we're going to do is search for the next trade, and here we do actually have our crossover sitting down here quite slightly, and this big candle that obviously has got this big wick, but it doesn't mean it's going to be a bad trade. So we're going to place the stop loss, I would say just a bit below this moving average, just to keep it a bit more secure. And take profit, we're going to bring it up to here to a risk reward of 1 to 3 as always. And let's see how this trade outperforms. Right now we are finishing the second month of February, and then we've hit our next take profit, sitting on 14.4% profit. So this is looking quite promising, and we could achieve this 20% even before we finish the last months of this year. It would be right now 4th of August. Let's see how this one turns out. Okay, it looks like we might get, okay, this looks like, was it actually a cross? No, it wasn't a cross. And as well, it's quite far away from the moving average, so it wouldn't make too much sense. Here we have another slight cross at the moment, but at the end of the day, we're sitting at the same situation with this candle, that the moving average is quite far away. It's $7 away from the actual price, so we're going to avoid that trade. And let's see if we find any other trade that comes in interesting. Okay, now the ADX is crossed, but the price still isn't below this moving average, so obviously we're not taking anything here. And now we do have a trade at this candle here that looks more interesting than the first one. So let's place a stop loss just here below, and let's bring our take profit up to here to a risk reward of 1 to 1. So we'll be looking at the take profit more or less here above, like 340 more or less. That's obviously now let's say, yeah, 340 is fine. And let's see how this one takes over. Okay, hit straight stop loss, no problem. At the end of the day, we're only losing a 1%, so that's perfectly okay. And did we get an entry here? No, we didn't, because it actually didn't close below, just closed on top. So we are going to avoid that entry, and it would have been a nice entry because it would have pushed quite strong down. We could have entered as well once the moving average closed here below. It would still be a range to actually get some take profits, but at the end of the day, first I'm following that the price is above or below the moving average, and then the ADX gives me an entry, or the arrow in this case. Now let's see if we get any other entry on the downside. In this case, it's still dominating in terms of volume. Now it's crossed up above, and now it's crossed below, so we have another entry on the downside right at this point here, placing the stop loss here above, take profit here down below, sitting this at a 1% risk, and more or less sitting, say 340 should be enough. And let's see how this one turns out. Okay, it's looking promising, and there we go, another take profit, sitting on a 16.7%. So we are so close to this 20% target that we're actually looking for. And here we're sitting on our next setup, but the same as before, it's quite far away of the moving average, sitting on $5. So at the end of the day, we would need to be looking for $15 movement on Apple, and I don't think this would be a really interesting idea. So we're going to avoid this trade, and we're going to see if there's any more. Maybe we get another retracement that is interesting. We do have one here, but the same as before, it's quite far away from the moving average, another $5. So we're going to avoid this one too. And let's see if we get any other entries. Okay, it's coming close to the moving average. It's crossed the ADX. Let's see if we get across here. Okay, it didn't cross. Now it has. Now it has crossed, and it looks like, oh, but we are on a green candle, so I would wait for a red candle. There we go, we got our red candle confirming this here. So now I'll be entering with a stop loss here above again. Let's see, with this trade we could actually get to this 20% that we're looking for. This could be really interesting, because at the end of the day, it would be literally in 2.5 months of trading, and that is a quite interesting result. Let's see how this one performs. Okay, it's not looking bad. It nearly wicked us out here, just here above. It just stayed so close away, and ooh, there we go, our take profit hitting this 20% gain in less than 3 months. I think this is really a really interesting result, because it's actually been basically on a random asset, and on top of that, it's been at a random time. It's not like I've selected a time where he actually tried it out or anything like that. It's just been on a random time, on a random asset, and a random guy testing it. So I think this is an amazing result, and let's see how it finishes off the year. Finished the backtest. Right now we're sitting on the 30th of July. I don't want it to take it to August, because at the end of the day is a weekend in between, and it could be a trade that's just hanging. So I think this is a good time to actually finish it. And we are sitting on a 25% gain in total. So I think this is completely amazing, especially because at the end of the day, the trading strategy is so simple that anybody with a basic notion of trading could actually put it into use and start trading with it. So I think it's a great beginner trading strategy as well, especially as well we're working on the 1 hour time frame, so we're not in this scalping, losing fast money all this vibe. So I think it's a great idea. And if we come to analytics, they are quite interesting because we don't have too many points to improve, meaning that the strategy is looking quite solid. The only thing is considering costly increase in position size after winning streaks, but this will only be a $70 gain. So I don't know if it would be worth it in the long game. We'll need to do a bigger backtest for this. As well, the exit optimizer gave me some cool results, but being able to bring this up to $4,300, making it even more mechanical, because at the end of the day we'll be using fixed take profit and stop loss with max holding durations and all that. So I think that could be quite interesting to look at, especially maybe just knocking off the take profit and the max holding duration and looking if we can find some max holding duration that matches. I mean, just look by bringing it to 8 hours. We can leave it at 1,500. If we bring it up to 10 hours, we're looking at 2,000. So it makes sense, because at the end of the day it can save us some time of being watching the charts. So that's something interesting. The equity chart is massive. We can see a really strong way up with a profit factor of 2.75. That is really high. And obviously if we do 10,000 trades or even 1,000 trades, obviously this will lower down, but it's a great start for this trading strategy, especially that we are sitting on a 50% win rate. This is completely massive. With this water, with 1 to 3, we'll be looking at maybe a 33% win rate, 34% win rate. Anything above that is a complete bonus. So I think it's a really good trading strategy, to be honest, and I'm happy that I've actually found it in a forum on a random post that I actually just looked at. So at the end of the day, I think it's a great idea to test it out yourself. And for that, obviously, you have in the description the discount coupon, so you can get Forex Tester Online for a cheaper price and try this trading strategy out. And obviously, if you do, I would love you to drop it down in the comments and let me know what you think. So I said this, my name is Jack, and I'll see you next time.